Hello everybody and welcome to the Middle Class Investor. This is Seth Martin, your host. Thank you for joining me again this week. Well, last week when we met, we were just finishing up this white candle here. So we had a close. We had a bounce from a higher low. So market came down here, it opened here, and began to bounce. And we had a pretty strong week. This week, the market opened here, down here at the bottom of this candle area. The bulls pushed it all the way up here. The bears came in and pushed it all the way back down, and we closed lower than we opened. So, you know, there's a struggle in this area right here. For the market. I mean, we've got this whole area right here. There's a lot of back and forth between bearish and bullish participants in the market. And this, in my mind, is expected as and probably will continue, although it'll either continue up to the top of this rising wedge, or it'll bias its way down toward the lower part of this wedge and possibly break it. So we don't know, right? We don't know what's going to happen, so nobody knows. Even people who tell you they say they know, they don't know. So just know that nobody knows what the future is. So really all we can do is just watch and make a reaction or make a decision based on what we see. So let's zoom out here for a second and let's look at a daily chart. So here's the daily chart here. Let me zoom in a little bit. Let's spend a little time looking at this, and then we'll look at bonds and some things like that. Gold, maybe. I'm sure some people are out there are interested in what's happening in gold. So we'll take a look at gold. Essentially, we've had this strong uptrend push, and then we've had this kind of sideways looking action to a recent pullback, but the pullback was to a higher low. So the previous low is off the chart here, but it's down here somewhere. So we've pulled back to a higher low and we've bounced. Now, what we're looking for is either for this to continue up this way and make new highs. So first we would have to break this high, and then we would have to break this high. So I know that seems intuitive, but we want to be able to break this high first, and then we want to come in and be able to break this high. And then if those two things happen, then we're going to look for this channel, this upper part of this channel up here, the upper part of this rising wedge. So, you know, that might look something like, you know, just kind of zigzag its way up there. Or the other side of the coin is, you know, obviously it could come down here and test this lower part of the rising wedge and bounce, or actually go through. So, you know, there's quite a few things that can happen here, and there's always multiple things that can happen in the market. Again, the high probability or the higher probability trends tend to continue. So really what we've got here is we've got an uptrend, we've got kind of a consolidation. This is a kind of a place where excess movement kind of gets worked off in the market, and then generally speaking, in an uptrend, the trend continues. Okay, so we would look for that to come up to here. But we do have a place where, for now, we've made a lower high. Okay, so this was a high, and now this is a lower high. And that's a place where we need to have a heightened awareness. Okay, so for example, what we we've talked about the bullish case, right, to come up here to this the upper trend line of this rising wedge. But the bearish case might be that it comes down here and makes a new low, okay, breaks this low and makes a new low. And then that all depends on how it does it, right? So if it does it kind of in this blue box and bounces, that's maybe more bullish. If it comes down into this area, into this box, bounces a little bit and then sells off, that's probably more bearish. So we'll just need to pay attention and kind of see what happens. But for now, the market's still kind of consolidating these huge gains that we have going way back. This goes way back like 5 years or more. So you can see this uptrend. We had periods of downtrend, but this uptrend has been intact for some time. And here you can see the rising wedge and the narrowing of price action. Now, just for the benefit of maybe newer listeners, I don't know if we have any newer listeners or not, but if we do, one of the things we talked about is that the reason this rising wedge is significant is you have kind of a mean or an average right in here, and what you can see is over the course of this time, the distance from the mean to the trend line has gotten smaller and smaller and smaller. And we've talked about this before, but basically, let me try this again. Basically, what happens is you have a situation where the money being made, the participants in the market, you can see that from here to here, that's a one distance. And then if you get over here, you can clearly see that this is a shorter distance. And then this is even a shorter distance. And then if we were to go on even further, you would see that these are even shorter distances. And so what's happening is the participants in the market, the market doesn't run as long for them to gather their gains before it reverts back to the mean and travels to the other side of the wedge. So the reason this is significant is because it kind of signifies that the market's getting long in the tooth. So if we zoom in, if we go to like a 6-month chart, let's say, and we zoom in on that, let's see if I can zoom in. I'm trying to get this, I can't really get this low in the picture like I want to, but we can see here's the most recent action. And really this area right in here is almost all consolidation. I mean, you can pretty much say that that's almost all consolidation. We have a little bit of excursion here and a little bit of excursion here. But really, I think what we're looking for is we're looking for either the market to come down like this and continue higher up to the upper trend line, or we're going to look for something, like this. Maybe it goes up, comes down a little bit, it goes back up a little bit, and then breaks this. And depending on what it does around here, if it breaks this, we might look for it to retest and then sell off hard. So these are the couple different scenarios that could happen. So we're just gonna keep our eyes open. We don't know what the future is. Nobody knows what the future is, and all we can do is sit and wait, and then make a decision when it becomes time to do something. So we've talked about this before, trading or investing. Really more so trading is a decision-making process. Investing can be a decision-making process, but your decisions are fewer and farther between. Let's take a real quick look at interest rates. You can kind of see a similar thing happening, but in the opposite direction here on interest rates. We've got the market kind of falling, then we've got this consolidation. And what does consolidation mean? Well, it normally means the trend will continue. So this trend is at least the intermediate term trend is down. You get this consolidation, and then a follow through probably to the downside. Now we have a box drawn on here on the 10-year Treasury. We might need to go out a little further. Let's go out 2 years, and we're looking for the interest rate, 10-year Treasury, to trade in a range that gives us an interest rate of about 2.4% before we see the longer term trend. You can see the longer term trend here is pretty much up. So we've had this uptrend, this consolidation sideways. The shorter term, we're probably looking to pull back into this box and then up. So this is significant because we've talked about this before, but the very, very long-term trend of interest rates has been down, and interest rates run in these 30-year half cycles, and we're very, very long in the tooth in this 30-year half cycle. In fact, it's more like 34 years. So it's something to be very careful about. I've spoken about it many times on this program about bonds and bond funds. If you have bond funds and IRAs, 401ks, you really want to take note of those and be ready to make a decision on those. If this is in fact the first move off the bottom, and we can go back even further. Let's just take a look at that real quick while we're talking about it. Here's a 20-year trend, and you can see this first move. If this is in fact the bottom, and this is the first move off the bottom, then this next move is going to be very, very strong, probably up here into this 5.7% interest rate or so, maybe even 6. And if that happens and you have bond funds, you're going to lose a lot of money. I'll just say it like that. You're going to lose a lot of money. So be very, 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 very careful about owning bond funds in this interest rate environment. One thing to note that's important is the Dow. You can see right here on this day, right here, this was April 4th. It actually made an intraday high. I don't know if you could see that. Here's the closing. The closing high of the Dow was 16,318. But here there was an intraday high of 16,000. I'm sorry. Here the closing high was 16,511.48. This intraday high was 16,631. So it was actually higher than this closing high, this white candle here. So the Dow did confirm the other markets and made a high. Now the one holdout is still the NASDAQ. And I would say, I don't know, I mean, I would say the NASDAQ, is already in. What'll be the determining factor for the NASDAQ? If the NASDAQ comes up here, let's zoom in and talk about this for a second, because I think this is worth noting. If the NASDAQ were to, let's say this is the recent high with the NASDAQ. In other words, let's say we're not going to go any higher than this. So let's just put that on there real quick. Let's say that high holds, okay? And let's further say that the NASDAQ makes a little bump up like this, and then gets to here like so. If this low, and when I say this low, I'm talking about maybe down here to 3,900 or so. So let's say this gets taken out. the NASDAQ is not likely anytime soon to make any new highs. Now there's a pot. This is where things become a little bit difficult. The NASDAQ could do something like this, and then sell off. But the key point on the NASDAQ is this low right here. This is the important low. Hold on, I lost my anchor. This low right here is the important low. So watch that very carefully. But it looks like the NASDAQ is trying to lead the market lower. That's what it looks like to me. But it could be that the NASDAQ comes up here first and then comes down here. But this low is going to be very, very key. And we'll put a new box on here. Since this box has been violated, we'll put a new box down here somewhere. And we'll talk about that in the coming weeks ahead. Let's see, what else? Let's look at gold and silver. Now, this is the XAU, which is like the gold and silver sector. It's like an index for gold and silver. Let's start off with like a 5-year chart of the gold and silver. And you can see here that the high was back here in, 2010 or something, end of 2010. Market sold off, made a correction, and then sold off really hard. And then it's kind of been consolidating here. And, we've talked about consolidations before. And it could be that the low is in for gold. It could very well be that. You can see though you can see here really all of this in here is consolidation. But it could be that gold makes one more new low. A lot of times when you see a big consolidation like this, it could be that it's through going sideways, but it's not likely to make highs from here. When it consolidates like this, it's likely to complete the trend, and the trend was down. So you could see one more new low here, and it could be significant. I mean, you could see gold and silver. You could see gold below, maybe $1,100, maybe $1,000, and then maybe come back to the upside. But it's unlikely when you see a big consolidation like that this rise here and this pullback is the first significant low and bounce off the low. It's unlikely. It could be, but it's unlikely. When you have a lot of times when you have a consolidation, you'll see the market push one more time to the low before it goes up. And this could have been it right here, but to me this looks like this is still within the consolidation area. But it's something to watch. We'll just have to keep our eyes on it and see what we see. That's really all I have for this week. Again, tell your friends and family members about the middle class investor. Certainly the ones that are more active. I mean, we're not going to tell you what to do on this site, but I will try to point out areas that I believe are significant. Not just because I believe they're significant, but basically we look at the charts, and the charts tell us what to believe is significant and what's not to believe is significant. The chart really, the information on the chart, the visual information on the chart displays real information about what's happening in the market. It's not just, a bunch of squiggly lines. I mean, for example, right here we talked about this is a weekly candle, this red candle here. The market opened up, the bulls pushed it all the way up here, the bears pushed it all the way down. Now, that's significant because here is the high, And isn't it interesting that the high, this weekly high here was the same scenario? We had the market opened up here, the bulls pushed it all the way up here, and the bears pushed it all the way down here for a closing high. I mean, the week was up. We were up for the week this week, but this was a bearish looking kind of candle arrangement. And it just means that the bears were more aggressive than the bulls overall in the market that week. And of course they followed through in the next week. The market opened up here. The bulls pushed it up a little bit. Bears pushed it all the way down here, just to below the box there, and then the bulls pushed it up so that they didn't finish the lows on the week. And then the following week, you had a little gap up. The bears ran it down a little bit. The bulls pushed it all the way up here to the top, and the bears pushed it down here for a closing closing positive week. So they kind of took back the previous week. But then you have this candle that looks a lot like this candle. So, you know, you might get another one that looks similar to this instead of just a down one, or we could just get a down week this week. So just be on the lookout for that. We're going to, as we get into this area around the box, we're really going to scrutinize the market activity here so that we can help make a good decision if a decision needs to be made. That's key. If a decision needs to be made. You know, we don't want to make decisions when decisions don't need to be made. We just want to make good decisions when it's time to make decisions, and try to minimize the bad decisions. Anyway, you can visit us on Middle Class Investor at YouTube, or at Investor Class on Twitter. Tell your friends, tell your family members. You know, just you're not going to learn how to trade here. That's not what we're doing. We're mostly just trying to protect people in their retirement type accounts. Make sure that if they're interested in exercising a sell discipline, that they do it, you know, at the right time. They don't jump the gun. They don't wait too long. So that's really our goal here, our mission, if you will. And keep coming back. I mean, as long as you guys keep coming back, we'll keep making videos. And I will see. I'm gonna try to have a video midweek. We'll gauge that. If that seems to be too frequently, then we might just do one a week. But and then if the market kind of heats up and really starts moving in one direction or the other, maybe we increase the frequency or something. But we'll kind of play that by ear and see how things work out. All right, everybody. Thanks for joining me this week. Talk to you soon.